Hello, good morning. You're watching Market Cafe on ET now with me, Vinny Motiwala. Along with me is Ankita Saxena as well. Ankita, very good morning to you. And viewers, just a note that yes, we are wearing red, but the markets and the indication that is coming in from the global handover is not red, right, Ankita?
Absolutely not, Vinny. Finally, we did see an uptick.
And happy Friday, I believe.
And happy Friday. We did see some firefighting in the banking sector yesterday in the US. Now, yesterday, a group of 11 major banks agreed to deposit $30 billion in First Republic in an attempt to bolster its finances and contain the fallout from the collapse of the two big lenders in the last week. Now, gains also came in after Credit Suisse said that it will borrow nearly $54 billion from the Swiss National Bank. Now, on the back of that, the Dow added 371 points, the S&P 500 advanced 1.7%, and Nasdaq Composite rose 2.4% in trade. Now, stocks are also on their way to a strong finish for the week. The Dow is up 1% for the week. S&P 500 is up more than 2.5% on pace for its best weekly performance since January, and the Nasdaq is up 5% on track for its best week since November. Now, let's look at the European markets. Now, European markets closed higher after a very choppy session during which, of course, the ECB came out and said that they would be raising the interest rates by 50 basis points despite the recent volatility in the region's banks. Now, the Stoxx 600 index closed up 1.2% provisionally, having flipped between losses and gains following, of course, the ECB's announcement. DAX was up 1.5%, CSE was up 2%, and FTSE was up 0.8% in trade. So, good positive handover coming in there, Vinny. Tell us where the crude is at.
Absolutely. Let's look at the crude because, yes, after falling for a couple of trading sessions, down 5% in the previous set trading sessions, we're seeing that crude oil this morning has seen a bit of an uptick coming in over there. Yes, Brent crude oil still continues to be below that $75 per barrel mark, but it's a muted trade that is coming in for the crude oil prices. Now, something that is calming the markets in terms of the crude markets is mainly that Saudi-Russian meeting has calmed the markets in terms of the crude derivatives and all. As well as the WTI crude oil prices as well, Brent crude oil as well as the WTI crude oil. Now, Brent crude oil as of now is somewhere around the $74 per barrel mark when I'm looking at it, while WTI crude oil prices are below the $70 mark at $68 per barrel mark as well. So yes, still below those levels, but keep an eye out on that. Saudi-Russia discussing that of enhancing the stability is something that is keeping the crude prices on check as well.
And well, let's quickly take you through the events that you need to keep an eye out for in the global markets. We have the US industrial production data and the Eurozone CPI inflation number that's likely to come out. We will be keeping an eye out for that. And back home, we have board meetings for BEL. They will be meeting up to consider an interim dividend for FY23. And we have GMR Airports board meeting for raising of funds through issuance of eligible securities through qualified institutions placement and foreign currency convertible bonds. Also, we have the 11th edition of a Delhi Literature Festival that will begin today. We have the EU Chamber of Commerce India that will be hosting the Education Summit, and we have the budget session of Delhi Assembly that will kickstart today. And finally, we have the ICCR that will be holding a meet on international relations on the 17th and the 18th of March. And with that, I'll quickly mark the SGX Nifty as well. It's up 107 points as of now. Even the US futures are in the red. They're largely flat, but SGX Nifty up a good 107 points as of now.
Absolutely, Ankita. Surely SGX Nifty indicating a positive start as of now for the markets as well. Let's move on and just talk about what is the rescue plan coming in terms of the First Republic Bank. And now the biggest US lenders swoop in to rescue this cash-strapped First Republic Bank with $30 billion cash. Now, JP Morgan, Citigroup, Bank of America, Wells Fargo are making a total of $5 billion worth of uninsured deposits into the First Republic. Morgan Stanley and Goldman Sachs are injecting $2.5 billion each, while the others are contributing $1 billion each.
And meanwhile, the job market in US remains robust despite the turmoil in the financial markets. Weekly jobless claims fell by 20,000 over the week to reach 1,92,000. Economists polled by Reuters had forecast 2,05,000 claims for the latest week.
And staying with more news from the United States, Treasury Secretary Janet Yellen warns of failure to raise debt limits, saying it would be devastating for the banks after the SVB turmoil. Says the banking system is sound even after in the aftermath of the crisis, but market rattling debt standoff could change that, and proposes a plan to prioritize debt obligations, calling it dangerous idea that would technically cause the US to default on its bonds.
And the European Central Bank, in its latest monetary policy decision, has hiked interest rates by 50 basis points, in line with the expectations. The main refinancing rate now stands at 3.5%, while the marginal lending facility rate has also been raised to 3.7%. The European Central Bank has also made note that inflation is projected to remain too high for too long, and has gone on to reiterate the euro area banking sector is resilient. Listen in.
Inflation is projected to remain too high for too long. Therefore, the Governing Council today decided to increase the three key ECB interest rates by 50 basis points, in line with our determination to ensure the timely return of inflation to our 2% medium-term target. The euro area banking sector is resilient, with strong capital and liquidity positions. In any case, our policy toolkit is fully equipped to provide liquidity support to the euro area financial system if needed, and to preserve the smooth transmission of monetary policy.
Prior to the events of the last week, around 150 basis points to go before it hit the terminal rate. So whereas the Fed could have quite comfortably today paused, and the Bank of England could have done the same, and Australia, New Zealand, others could have justified pausing at this stage, the ECB is probably one of the only central banks, if not the only central bank, that couldn't justify pausing its tightening cycle because of financial stability concerns, because of how much more work there is still to do on the inflation side. Then you've got to ask the question, what would be achieved? What could be achieved from pausing? Well, you could potentially allay some of those financial stability concerns, but then you also fuel the fears in the markets that something terrible is about to happen. The central bank knows more than we do.
Now, moving on, BuzzFeed has transferred cash from the cash-hit Silicon Valley Bank to other financial institutions. Now, this comes days after the digital media firm stock slumped on the news of its exposure to the troubled bank. The company's stock was over 4% lower in the aftermarket trading yesterday. And now remember, the company's decision is to move its money comes despite the FDIC having guaranteed all depositors of the SVB access to their money.
And UK, following a similar decision taken by the US, Canada, Belgium and the European Commission, is also banning TikTok from government devices over security concerns. According to the UK Chancellor, the app is known to extract user data outside the app itself, which is the source of concern for many Western nations.
And after the much-awaited launch of China's Badoo unveils its AI-powered chatbot, Bot, and this comes after Google, Microsoft stepped up the AI game. But it has disappointed the investors due to its use of pre-recorded videos and lack of public launch, which eventually led to the fall in the share price.
And OpenAI now announces ChatGPT 4. We tell you how the new avatar takes AI a notch higher. My colleague Vikramosa explains. Let's have a look.
Now, the Microsoft-backed startup OpenAI has begun the rollout of ChatGPT 4. It's a powerful artificial intelligence model, and it's all set to succeed the wildly popular ChatGPT. So this brand new ChatGPT 4 is bigger, it's faster, it's more accurate than its predecessor. And so much so that it even cleared several top examinations with flying colors, like the Uniform Bar Exam for those wanting to practice as lawyers in the United States. So what makes ChatGPT 4 special is that it's a large multimodal model. It sounds complex, doesn't it? Well, let's break it down for you. You see, despite its insane popularity, ChatGPT had several limitations, and prime among these were the ability to process only textual inputs, so users could only ask questions by typing them out. But ChatGPT-4, now that we called it a multimodal language model, and thus it is capable of understanding and analyzing images as well. And over and above that, while ChatGPT 3.5 could handle around 8,000 words, on the other hand, you have ChatGPT 4 now that can handle up to 64,000 words. So simply put, it means that ChatGPT could process a whopping 8,000 words at a time before it starts to lose track of things. OpenAI claims that ChatGPT 4 would be harder to trick, and it will offer the best ever results on factuality. It scores as much as 40% higher on certain tests of factuality when compared to its predecessors. And as if this was not enough, ChatGPT is more multilingual. It outperforms its predecessors by accurately answering thousands of questions across 26 languages. It already has an astounding 71.4% accuracy in Indian languages like Telugu. OpenAI claims that ChatGPT 4 exhibits human-level performance on various professional and academic benchmarks. That's what they say. Now, the language model can solve difficult problems with greater accuracy and can pass a simulated bar exam with a score around the top 10% of test takers. And not just that, it has the ability to process long-form content, document search and analysis, and even extended conversations. Despite all its prowess, though, ChatGPT does have a few limitations, certain limitations. It lacks the knowledge of events that occurred after September 2021. It also does not learn from experience. But be that as it may, the future of AI-powered language models, it looks very promising right now, because just look at it. In a short span of time, ChatGPT has really transformed the artificial intelligence landscape. And as technology evolves, it will perhaps be even bigger, even better, more powerful, and certainly more intuitive, just like we imagine artificial intelligence to be in times to come.
Okay, on that note, we're going to slip into a very short break. Viewers, don't go anywhere. SGX Nifty indicating a strong positive start for the Indian markets as of now.
Welcome back. You're watching Market Cafe. Now, before we begin with the rest of the news flow, let's quickly go across to the news for the hearing impaired.
संसद के बजट सत्र में 4 दिनों से चले आ रहे हंगामे के बाद आज गतिरोध टूटने के आसार। विदेश में अपने बयान पर चौतरफा घिरे कांग्रेस नेता राहुल गांधी आखिरकार संसद में बोलने को हुए तैयार। लोकसभा अध्यक्ष से कल मांगा था समय। भाजपा राहुल के माफी की मांग को लेकर देश भर में चलाएगी अभियान। राष्ट्रपति द्रौपदी मुर्मू आज अपने केरल दौरे के दूसरे दिन कोल्लम में माता अमृतानंदमयी मठ का करेंगी दौरा। तिरुवनंतपुरम में नागरिक स्वागत समारोह में होंगी शामिल। अनुसूचित जनजाति के व्यापक विकास से जुड़ी योजना उन्नति का करेंगी शुभारंभ। भाजपा अध्यक्ष जेपी नड्डा का आज से 2 दिवसीय कर्नाटक दौरा। आज चित्रदुर्ग में कई कार्यक्रमों में होंगे शामिल। चल्लागेरे में पार्टी की विजय संकल्प यात्रा में लेंगे हिस्सा। बाइक रैली को दिखाएंगे हरी झंडी। रोड शो के साथ साथ एक जनसभा को भी करेंगे संबोधित। शंघाई सहयोग संगठन के पर्यटन मंत्रियों की 2 दिवसीय बैठक आज से काशी में होगी शुरू। बैठक में सदस्य देशों के बीच पर्यटन क्षेत्र में सहयोग के विकास को लेकर संयुक्त पर्यटन कार्य योजना को मिलेगी मंजूरी। पाकिस्तान में पूर्व प्रधानमंत्री इमरान खान के खिलाफ आतंकवाद समेत कई आरोपों में नई प्राथमिकी दर्ज। इमरान खान पर तवान पार्क में मौजूद अपनी पार्टी कार्यकर्ताओं को पुलिस कर्मियों पर हमले के लिए उकसाने का आरोप। अमेरिका में तीसरे बैंक को डूबने से बचाने के लिए आगे आया 11 बैंकों का समूह। फर्स्ट रिपब्लिक बैंक को जमा और पूंजी के तौर पर $30 अरब की दी सहायता। अमेरिकी वित्त मंत्री पेट चेयरमैन ने बैंकों के निर्णय का किया स्वागत। भारत और ऑस्ट्रेलिया के बीच 3 मैचों की एकदिवसीय श्रृंखला का पहला मैच मुंबई में आज। हार्दिक पांड्या आज खेले जाने वाले वनडे मैच की करेंगे कप्तानी।
Okay, and let's slip into a short break. And as we slip into a short break, we're going to be seeing exciting lineup coming in on the market for you all that we have. At 8:05, we have Dan Feynman at Credit Suisse joining in with us to talk about the markets, how we'll be seeing the global view coming in from there as well. At 8:15 a.m., we have Pankaj Murarka as well as Sandeep Sabharwal to talk about the change in guard at TCS. While in terms of talking about navigating the volatility of the markets, we have 9:20 Dinshaw Irani, CIO at Helios India joining in with us. And at 9:35 a.m., we have Gautam Shah, CMT and founder and chief strategist at Goldilocks Premium joining in with us as well. Crude, that has seen a crack coming in. To talk about that at 9:45 a.m., we have MK Surana, former CMD at HPCL. While at 10:20 a.m., we have Ram Reddy, MD at Balaji Mines to talk about the trends in the industry shaping up. And in terms of global trends, we have Sachin, President at Joint MT at KPIT, joining in with us to talk about the demand trends in that sector as well.
Welcome back. You're watching Market Cafe. With the global banking crisis taking center stage, the impact is reflecting in India as well. Now, select foreign banking names from the likes of Deutsche Bank, Barclays, UBS, Morgan Stanley, etc. are all exiting India, citing a slew of reasons. Maithili Busniramath, who's a consulting editor for ET Now, has a lot of opinion on this. Let's take a look at what she had to say.
Well, the RBI might just come out and say that the banking system is very sound, which it is, but it's not that we haven't had our share of failures. We've seen Yes Bank, ILFS, Diwan Housing. So we have seen cases where, well, RBI did fall short as far as supervision is concerned, but the nature of our banking is very different. Unlike banks abroad, we don't have these kind of wholesale deposits. The deposit base of banks in India is retail deposits, a large number of retail deposits. Nor are they so focused on any one particular sector as we saw in the case of Silicon Valley or in the case of Signature. So I think that makes a difference. And also investment banking and commercial banking are kept quite distinct. So to that extent, I think our banks are certainly safer, but we have to remain that you have to eternally be vigilant, because even though you have Basel norms and higher capital adequacy norms, etc., I just want to quote what Walter Bagehot said, what he said. He said, a well-run bank doesn't require any capital at all. And a badly run bank, no amount of capital is sufficient for it. So confidence and well-run banks, well-supervised banks is the only answer. That's the only way going forward, both in India as well as abroad.
Okay, let's move on. And my colleague Sharad is joining in with us to explain what's leading the foreign banks exit. Let's go across.
We have looked at the foreign institutions here and how they have exited India or actually scaled down their operation. But what are the key reasons for it? Let's point that out. This includes regulatory and taxation concerns, of course, competition coming in from the local banks, and also the rising number of the new players. But now let's go over the entire course, how it pans out. And of course, for the year 2011 itself, Deutsche Bank actually sold its credit card business, and this has gone to IndusInd Bank. Now moving on from 2011, in 2012 itself, Barclays was also in focus. There was a massive scale down happening in their operations. And when it comes to 2013, UBS also exited their India operations. Now, this is also the retail and the institutional part. For 2013, Morgan Stanley surrendered their banking license, while in 2015, majors such as Merrill Lynch, Barclays, Standard Chartered reduced their operations. Even in 2016, if you see, Commonwealth Bank exited their Indian operations. And the same year itself, even Royal Bank of Scotland winded up most of their businesses. HSBC actually halved their branches going ahead in the year 2016, while in 2020, PNB Paribas shut down their wealth management business. And of recently, in 2023, the entire business of the retail part for Citi was sold to Axis Bank.
All right, then, and keeping up with the same topic of foreign banks exiting Indian market, my colleague Tamanna Inamdar caught up with Ajay Bagga, who's the chairman of Elements Platform, Geoff Dennis Independent Emerging Markets commentator, and Siddharth Sanyal, who's the chief economist of Bandhan Bank, on their view over the global bank turmoil.
Whereas Credit Suisse, as Ajay said very, very clearly, and your previous speakers said, is has had a run of problems, which this material misreporting of the last 2 years of results is the latest. And I would actually make the point that if it wasn't, however, for the regional bank crisis, you would actually not have CS, Credit Suisse, in quite such a crisis today. In other words, they've melded together, even though in my opinion, they are completely different stories. And so as far as I'm concerned, I'm sure there are many solutions to to the crisis in Credit Suisse, and your previous speakers have outlined those, and I do not believe it will be allowed to go to the wall, and obviously the injection from the SNB is very, very important.
We don't see any possibility of any systemic risk because of this particular incident, though in today's world you cannot be complacent, but there is not too much of a room or not too much of an immediate fear of any system level risk. If you see in terms of regulation of Indian banks, typically you see that some of the regulatory prescription levels are stronger or stricter than compared to many global economies or larger economies and other EMs. And more often than not, most Indian banks end up keeping a buffer over and above the regulatory minimal levels.
All the right noises they are making, it's a 150-year plus venerable institution. There is no liquidity issue. All those things are coming in. So you have to be very careful when you are making a public statement like this. It can be exaggerated out of context. But would it have happened to another bank? Doubtful. It was the situation in which Credit Suisse already was, and that led to this.
Let's talk about the change of guard happening in the IT space. India's largest software service provider, TCS, has announced the resignation of the MD and CEO Rajesh Gopinath. And now Rajesh Gopinath will stay with the company till September this year. Meanwhile, Kirthivasan has been named as the CEO designated, and this obviously he will be taking over after September that Rajesh leaves TCS. Now, Kirthivasan is currently the president and global head of the BFSI business group at TCS. The outgoing CEO Gopinath recalled how the group increased its market capitalization by $70 billion in the last 6 years. Chairman N. Chandrasekaran meanwhile said that this outgoing CEO has laid the foundation of the next phase of growth for the company. Let's go across to my colleague Omkar, who's a research analyst at, Omkar, who's a research analyst at Axis Securities, to talk more about this change of guard. What does it actually mean?
There might be an impact negatively by stepping down of Rajesh Gopinathan because of the uncertainties going around. There might be an delays in the spend cuts. You need a lot of interaction with the clients and the leadership. Mr. Rajesh Gopinathan is well executor in terms of project deliverables and getting the deals in their pipeline. So there might be a negative impact for the tomorrow of couple of days more. But I believe there will not be any fundamental change as of now because, Kriti Vasant has been is a leading BFSI vertical, which is predominantly a larger chunk of the revenue for the TCS. Is there with the TCS from 1989. So I believe that kind of he knows vertical and maybe a company very well. So he might get an execution part very well. I do not see any immediate fundamental impact on the revenue side or any supply side or execution capabilities. But we need to see in a longer run how he's leading the company going ahead.
I think the bigger picture is what is the IT environment? As you know, the economies of USA and Europe are on the verge of collapsing. The financial crisis is there. IT budgets are down 15 to 25%. This is the new normal. Changing the CEO is the right approach. TCS will need to change the narrative. How is TCS and other Indian IT services companies still relevant in a declining IT spend environment and where a lot of projects are getting cancelled? So what kind of new services and new narratives are all Indian IT services companies are going to provide is going to be critical. And changing the CEO preactively is very good move from TCS because a new face with a new narrative and soon new services will need to be launched. Otherwise, the stocks of not just TCS, but the whole ITC services could collapse. This is a very good preemptive move from TCS, and it should be, I think, rewarded because they're being proactive. But the economics of the world is deteriorating. So, we have to have that context.
Welcome back, and you're watching Market Cafe on ET. Now, let's move on and talk about an ET report that has come in this morning. We have what it indicates is that the PE firm Everstone Capital is in talks with General Atlantic to sell its entire stake in the India master franchisee of the American fast food restaurant chain, Burger King. Now, Everstone Capital holds around 40.9% stake in Restaurants Brands Asia as of now. So keep an eye out on these news flow update today. We'll be waiting in and getting more updates on this news.
And well, then it's that time of the show where we get you all the stock-specific action. And for that, we have Lisa and Vamakshi in the studio with us. Lisa and Vamakshi, good morning. And I see we are all twinning, Vinny and I, you and Vamakshi in red and green. Let's see where the market picks up the action from, red or green. But for now, Lisa, tell us what are the stocks that we need to keep an eye out for?
Yeah, sure. Good morning. Starting with Dr. Reddy, they'll be divesting certain non-core assets in dermatology, that is their Indian business, to Eris Life Science, and that is to focus on their core business. And the consideration for the same is 275 crore. Volta's subsidiary Universal MEP Projects and Engineering Services, they have bagged projects worth rupees 1,700 odd crores, and that is for the power distribution and solar projects. Glenmark has received acceptance from US FDA on its IND application, and that is to proceed with phase 1 and 2. This is related to the drug for advanced cancer patients, and also they have announced a dividend of 21 per share mid-year dividend. GlaxoSmithKline Pharma company will be awaiting final notification on some brands. This is related to the analyst meet that it had. The company will be estimating the impact of NLEM price revisions and is working on multiple mitigations for the same. They are also expecting impact on the profit to be in low single digits in the next financial year. Zee Entertainment has settled disputes and claims with Indian Performing Rights Society, and subsequently the insolvency petition filed by IPRS that stands withdrawn. RVNL has emerged lowest bidder for 112 crore project. This is related to the Jabalpur project. And lastly, Samvardhan Motherson International Board has approved the acquisition of the remaining 50% stake in Fredsmere Motherson Cabin Engineering, and that is from their JV partner. The consideration for the same is around 107 odd crores. So these are the stocks that will be in investors' radar today.
Okay, Lisa, thank you so much for that. But we also have Mamakshi with us in the studio. Mamakshi, very good morning to you. And what are the brokerages saying this morning?
Well, a very good morning to all of you all. We will start off with Varun Beverages. That is the sector that you track closely. Now, CLSA has come out with a report, and what they're highlighting is that Campa Cola's introduction should have a limited impact on Varun Beverages as of now, and that is on the back that they do not distribute products in Andhra Pradesh and Telangana. The price cut, as far as that is concerned, that was taken prior to the launch of Campa Cola and was not a reaction to the recent introduction. Price wars, in their opinion, is not an immediate threat for the company, and they're in fact expecting the promotional intensity to pick up before the summer season. Foray into other states by Campa Cola will be a key factor to watch out for as well. So given all those factors, Varun Beverages is in focus. CLSA has maintained an outperform rating, target price of 1,500 per share. We also have Jubilant FoodWorks in focus. Macquarie has come out with a report, and what they're highlighting is that the input cost pressures as well as weak demand could have an impact on the margins. Capital intensity could also weigh on the return ratios, and the gestation of Popeye's profitability is likely to take longer than expected. So given all these factors, Macquarie has actually maintained an underperform rating on Jubilant FoodWorks and in fact gone ahead and cut their target price from rupees 380 to 350. And lastly, watch out for TCS. We have a note that has come in from Citi. The CEO resignation has come in as a surprise for the street. However, the appointment of Kirthi Vasan should imply more continuity. He has spent nearly 34 years at TCS, and changes to strategy will be another factor that we will be watching out for. Now, it is on the back of all these factors, Citi has gone ahead, maintained a sell rating, target price of 2,990 per share.
All right, thank you for that, Vamakshi. We will keep an eye out on all the stocks that you mentioned. Moving on, DLF Management spoke to ET now after bumper bookings for their luxury, the Arbor project. CEO Ashok Tyagi says that they are betting big on the infra boom and working on building a robust pipeline in anticipation of robust demand. Listen in to what he had to say.
This time we actually, this is not classical pre-sales, you take 5 lakh rupees or 10 lakh rupees and declare sales closed. All of these people have actually paid the first 10%. So all of these people have actually made an investment of, whatever, close to 75, 80 lakhs each, before sort of concluding the sale.
And the agreements.
And the agreements have been signed. So this time we actually upped our own threshold of recognition of pre-sales. And because we just wanted to ensure that, there should be no froth which sort of gradually calms down. And I think this has actually been very serious selling effort.
What is the average price at which you've sold this entire project?
So it's about, it's between 7.5 and about 7.5 plus crores.
So,
and about 1,137 odd apartments.
So about 18,000 rupees a square foot on saleable area.
Higher than the average prevailing price in the market, or is that a discount? Because that is the trick. If you sell something at a discount, obviously it's a DLF product, it will sell fast.
There is no discount. It is what we launched at, we sold, not even 1% given.
No. Discount from the existing price of that area.
Right. So this is not a discount from the existing price of that area, Nikunj, frankly. I mean, the only thing is that maybe people may have been expecting a higher price, but we wanted to ensure that we come up with a price which is a price at which the people would actually feel thrilled on buying it. But this definitely not a discount on the prevailing prices in that area.
Oh, but actually it's a premium study.
It's a premium by about a couple of thousand bucks.
So if you look at the area pricing at that at the area there right now, it's about 16,000, which is the genuine price on ground.
Mr. Tyagi, when you initially launched the project, was this part of the guidance which you have shared with us, or now this project is going to ensure that your guidance is going to be surpassed? Sir, why are you smiling?
No, I'll tell you. Because Nikunj, when we had given you a guidance of 8,000 plus, and by the end of December, we had done 6,500. This launch was always scheduled for Q4. And frankly, in our wisdom, we had assumed that we'll sell about 2,500 odd crores of this launch in the first quarter of its launch. So we'll end up with the annual sales of about 9,000. The way it turned out, the demand was just so strong that we obviously, the minimum sales that we report now will be the 6,500 that we reported in December. plus at least the 8,000 of Arbor, plus whatever else that has been sold in other products. But yes, the guidance obviously is history with this.
Okay, let's move on, and we have a note coming in on Jubilant Foodwork as well from Macquarie, and Ashesha is here with more details on that. Ashesha, a very good morning to you. And what is Macquarie saying on Jubilant? Is this a positive or a negative note?
Negative note. They've gone ahead and cut their target price on Macquarie. They're maintaining their underperform rating, but they've cut their target price from 380 rupees per share. They've gone ahead and cut the target price to 350 rupees per share, and the stock currently trades at 425 odd levels. They say input cost pressures and weak demand could likely hurt margins in the coming couple of quarters. Capital intensity, however, they believe could weigh on return ratios, and gestation on Popeye's profitability is likely to take longer. They've also gone ahead and spoken about margins, where they say that Jubilant's margins are expected to moderate in the fourth quarter to 21% from 22% margins that we saw in the quarter gone by. Continued demand weakness and inflation for cheese and flour is the likely reason why margins are expected to moderate in the coming quarter. They say demand weakness delaying path to steady profitability, resulting in additional margin headwind for the company. They've gone ahead and reduced EPS estimates as well. For FY23, they've cut estimates by 3%, and for FY24, they've gone ahead and cut EPS estimates by 8%. For now, they're maintaining their underperform stance on the stock, but the target price has been fixed at 350 from the earlier target of 380 per share.
All right, Ashesha, thank you for that. Now, the government is gearing up to meet additional power demand due to unprecedented summer this year. Now, it is estimated that the peak power demand may cross 230 gigawatts this summer. My colleague Prakash Priyadarshi has more details on the government preparations. Let's take a look.
Government has prepared multi-pronged strategy to meet growing power demand during the summer. As per the Power Ministry's assessment, peak hour power demand may touch 230 gigawatt during month of April this year. But the coal supply to the thermal power plants are not sufficient to meet growing demand. As per the Power Ministry's recent data, thermal power plants have 34 million ton of coal stock level at the moment as on March 5th, which is only sufficient to run thermal power plants for 12 days. So taking into consideration, Power Ministry is taking various steps to increase coal supply to the thermal power plants, including additional power generation from different sources. Power Ministry has directed all thermal power plants to not take any planned outage during month of April and May this year. Also, government has approved a mechanism to operationalize around 5,000 megawatt gas-based power plants during month of April and May this year to increase power availability. NTPC Vidyut Vyapar Nigam Limited has been appointed as a nodal agency to float tender for procurement of this power. Apart from that, NTPC is also planning to import 5.4 million ton coal to meet a domestic requirement during first half of the financial year 2024. All states and independent power producers have been directed to import at least 6% coal for blending purpose. Power Ministry has also invoked Section 11 of the Electricity Act and has directed all imported coal-based power plants to operate with full capacity. The whole purpose behind this Power Ministry's proactive approach to meet growing power demand during this summer.
Okay, thank you so much for that, Prakash. But moving on to top market veterans make sense of the global chaos. Punita Kumar Sinha, Devina Mehra, Rahul Bhasin all believe that the Indian markets remain fairly resilient despite the global shocks. While the turmoil in the banks is worrying, there is opportunity across sectors in India. Let's go across and listen in.
The psychology of the market too greatly as far as the Fed was concerned. So that might be a thought there. And what that does naturally to the US dollar, and where does the likes of indexes, what happens to Wall Street and the overall picture globally with equity markets, and naturally you roll that across to bond yields, currencies, commodities. Look at copper yesterday, down nearly 4%. Gold still sitting at that 1915 sort of handle. I'm looking on the screen now, about 1915. So, yeah, there's big moves out there, big volatile moves.
Ultimately, once this plays out, maybe the impact on the markets may well be positive, because what the markets now are banking on is that because of all these issues, Fed will back off somewhat on the rate hiking. In fact, being like kind of zero weight on banks, we actually went to market weight on banks now about 9 months ago, and that has done well for us. So that we still continue. Capital goods, we continue to be overweight, but of course, that story has been playing out for us for a year and a half. So I mean, while it still looks like an outperformed sector,
the transition from the IC engine to the EV engine, you're on a structural growth path. AI is another area which is, you can see around the world that's going to significantly change things. Cybersecurity is another area where you get tremendous amount of growth, right? Engineering services, the world is moving to more and more defense expenditure. So I think you'll see a lot of these kinds of changes taking place.
As an investor, the first thing which we have to remember is that what are the possibilities of SVB kind of situation in India? One, our interest rates haven't risen as much as US Fed had to raise. So to that extent, mark-to-market losses on our treasury portfolio will be limited. Number two, India has implemented Basel III norms for banking system. In US, it has been implemented on a piecemeal basis. Under Basel III norms, you have to maintain liquidity coverage ratio, which apparently wasn't maintained in SVB cases. So to that extent, we are better off.
So if markets collapse further in terms of stock prices, particularly of the banking sector, and the valuations will become a little bit more attractive, and then markets will start looking ahead, potentially if the Fed rate hikes stall. So there could be, while it's going to be a very volatile environment, there will be trading opportunities, I think, in this environment to make money. So the valuations of the banking sector and some of the other sectors where there's been price dislocation actually becomes a little bit more appealing, and emerging markets as an asset class obviously look even more attractive as compared to the US.
All right, and with that, it's time for us to wind down on this show. Thank you so much for tuning in. The markets will take the action forward.